The first one is keep it simple, right? I wanted to talk about Buffett and a little bit what you touched on before, Tom. I was reading today, this afternoon, Elon Musk came out and said, Optimus, that robot, Optimus is going to is going to cure poverty, right? In the future, everybody's going to get whatever they want. This is the sort of bullshit that this idiot goes on with. You've got Warren Buffett, who's lived in the same house for 65 years, right? Drives an average car, has had two marriages, right? He's lived in the same house. He's taken, I think he's taken $100,000 a year as a pay from Berkshire Hathaway, right? Because Buffett said, you can never do a good deal with a bad person, right? And this last market cycle has been infected by a lot of people who are bad people, right? And what I mean by that is they're fraudsters, right? Sam Altman, Sam Bankman-Fried, Elizabeth Holmes, Adam Newman, these people were down and out fraudsters, and there's still plenty of them about, right? Elon Musk, could you imagine Warren Buffett rightly saying to Berkshire, hey, I think I'm worth $1 trillion. So, but anyway, there's a couple of things. So I wanted to, I just give you what I think are my 3 greatest lessons from Buffett, even though there's so many of them, right? The first one is keep it simple, right? The more things are complex, the more you should run a mile, right? So again, he lived in the same house for 65 years. He didn't worry about the bloody bedrooms or, how much is it worth? Or, I want to move somewhere else. Or, Johnny bought a bigger house, so I should buy a bigger house because I'm smarter than Johnny. I'm just living in the same house. 80 years of the same investment philosophy, never wavered, right? Has seen heaps of bubbles, the nifty 50 in the 60s, right? He saw the .com. He's seen this latest AI stuff. Never gone near any of them, right? Second one, compounding, right? It takes time and patience. Last one, value, not price, right? What I was saying before about gold and about Bitcoin is Buffett talks about value, right? And I can tell you the price of gold, but I can't tell you what it's worth, right? And he is, because any investment is the sum of the cash flow that it pays out over time. Well, gold doesn't pay out over time, doesn't pay anything, right? Now, the price may change, absolutely, but doesn't pay anything. Because he says, well, it doesn't deliver anything. You buy $1 million in a farm, well, you get crops and you can sell, corn, tomatoes, wheat or whatever. You buy $1 million worth of gold, what do? Nothing, it just sits there. And so the point being, knowing the price is easy, knowing the value is the tricky bit, right? So you've got to do the maths. And the numbers will tell you much more than the narratives, right? And the last thing is, on that thing is have a margin of safety in all things, right? If you think it's worth $1, wait for it to get to 70 cents, right? Don't try and pick it up at $1.10 or $1.20, right? And so you're going to need a strategy that deals with that volatility, right? And that's what we'll be, aiming to show people and what we show people in the Wells program, right?